So today we're going to be discussing the lack of data from the US, the UK, the general election in the UK, and what is happening with the Kiwi in the midweek wrap with Bob Mason of FX Empire. So hello, Mr. Mason, and thank you once again for joining us today. Let's start with data releases. All quiet on the US front this week. However, we did notice that high impact data was scheduled for release in the UK. Can you enlighten us on this?
Economic data out of the UK was on the busier side this week. On Monday, we saw GDP numbers disappoint. Economy in the third quarter grew year on year at the slowest pace since 2010. Industrial and manufacturing production and trade data also disappointed. We saw industrial manufacturing production slide and the trade deficit widen. Moving on to Tuesday, we saw employment numbers also weigh on the pound. We saw the claimant counts jumped by 33k in October, and while the unemployment rate slipped in September, the claimant count suggests that fall is a temporary glitch, and that the numbers are going to be negative next month. Wage growth also slowed, with vacancies falling and unemployment rising. The doom and gloom is beginning to hit home. GDP may have avoided a contraction, but things are not looking much better going into the fourth quarter. On Wednesday, we saw inflation pressures also ease. Not really a major concern, with the annual rate of inflation still sitting above 2%, but obviously following last week's BOE vote on the monetary policy side, the two dissents might increase next time around when we consider the numbers. On Thursday, we saw retail sales also disappoint, just rounding off a bad week. In spite of all that, the pound held on to gains from the start of the week from Monday, all of which has come off the back of UK politics and the Tory lead widening over the course of the week.
It appears that the UK is slowing down. This could be due to a lack of investment with the upcoming general election. With campaigning in full swing right now, how do you see the elections going?
The pound got a much needed boost this week off the back of UK politics. On Monday, there was a big jump in the pound off the back of news that Nigel Farage and the Brexit Party would not be competing with the Tories on the 317 seats that they currently hold. We saw support for the Tories rise upon the announcement. Looking at the electoral calculus projections on the seats, the Tories are now projected to win a majority of 112 seats, which almost ensures that Brexit takes place with the deal that Boris Johnson had negotiated with the EU. Looking at the opinion polls, YouGov has the Tories with 42% share of the vote, well ahead of Labour's 28%, and the Lib Dems are nowhere to be seen, with two-party politics returning. So opinion polls, projections, all pound positive, and as things stand, the UK would be departing the EU by the 31st of January next year. Manifestos will be coming out, however, and we can expect some movement in the polls as the parties begin to demonstrate what intentions they have, should they take number 10.
Let's discuss the Kiwi, which jumped up 1.31% this week. What is happening in New Zealand?
The Kiwi dollar got some much needed support this week. While economic data was skewed to the negative on Monday, with electronic card retail sales on the slide, the RBNZ hold on interest rates delivered the upside. Markets had expected a rate cut, 55% probability of a rate cut on Wednesday morning. With the RBNZ holding, the rate statement really did provide some further support. Members of the committee viewed the outlook in terms of the economic growth for next year in a more positive manner, seeing the slowdown through 2019 reverse through 2020. Inflation expectations were also slightly better for next year, with the RBNZ showing little concern over the softening in inflationary pressures this year. When we saw the 2022 inflation expectations numbers this week, inflation had pulled back to 1.8%. That was above 2% going into the second quarter of this year. So RBNZ hold on rates delivered the upside for the week.
So thank you once again, Mr. Mason, for joining us today. That was the midweek wrap, and we will see you again next time.